This is your LMAX exchange technical update for Friday, May 26, 2017. Eurodollar. So the euro showing signs of exhaustion right now following this recent run to 2017 highs this week, with the market trading up to as high as about 1268 before pulling back, this latest minor pullback. At this point, the uptrend is clearly intact, and the question right now is whether the market is going to pull back a little bit more to find a higher low in favor of a continuation of gains, or if we're going to just consolidate around current levels in the 112 area ahead of that next test of key resistance at 113.67, which comes in the form of that August 2016 high. Key levels to pay attention to over the coming sessions come in by below. You're looking at 1160 as some key support, and above the recent high that we just talked about around 1268. A break above 1268 would likely expose an immediate retest of 113.67, while a breakdown back below the 1160 area could open the onset of a short-term correction, exposing a break back down towards previous resistance now turned support in the 110.20 area. Ultimately, while this market holds above a confirmed higher low at 108.40, going all the way back to the 10th of May, the overall structure continues to be highly constructive. Sterling dollar. So cable is seeing a bit of a pullback in recent trade. Overall, you can see here that the market's mostly been consolidating above 27.75, that previous multi-week, multi-month range resistance, and the breakdown could still extend, but any setbacks now are classified as corrective following this breakout, which shifts the more medium to longer term outlook to the top side, exposing an eventual retest of or measured move extension test of 135 further up. But again, if we see this pullback, it could very easily extend, with the market still quite constructive and just looking for a higher low ahead of a continuation of gains. Where that higher low could be, we could head down as far as the 125 area without it compromising the constructive outlook, and really only a break back below 23.60, that low that we saw back on the 10th of April, would compromise this constructive outlook for the pound. So on a short-term basis, we could still see short-term pullbacks, but overall the outlook remains highly constructive, with the market likely to be very well supported on dips into the 125 area ahead of an eventual test of 135. Dollar yen. So dollar yen has been confined to a consolidation over the past several sessions, but the market has recently come off from stalling out at 14.37, which keeps the overall pressure on the downside and suggests we could still see a retest and break below the recent 2017 low just ahead of 108. At this point, it would take a break back above 114.37 to take the pressure off the downside. Euro Swiss. So the story with Euro Swiss is the market had a nice rally several weeks back, or a few weeks back, before finally stalling out into and ahead of the 110 barrier. That 110 barrier is going to be a critical level to watch. It's a bit of an inflection point. A break and close above would shift the structure on a medium to longer term basis and open the door for significant upside. But while the market holds below, it does keep the pressure on the downside, and there is risk and scope for a renewed downside extension back towards 2017 lows ahead of 106. Aussie dollar. So with Aussie, the market has been trending lower, putting in a series of lower highs and lower lows, and most recently the market has stalled out up ahead above 75, at just above 75, around the 75.20 area, where a fresh lower top is sought out now in favor of the next major downside extension below some key support that we'd seen around 73.30 and towards the 2016 December base at 71.60. At this point, only back above 76.11 though would compromise the bearish outlook. Dollar CAD. So dollar CAD has been highly constructive. The market has been trending higher, recently putting in a 2017 high at 137.94 before we saw the onset of this latest healthy correction. At this point, a higher low is now sought out. Ideally, a higher low would be seen by this recent low around the 133.90 area in favor of that next major upside extension beyond the 2017 high at 137.94, and then up towards and above psychological barriers at 140. But only back below 132.20, that higher low that was confirmed going back to April 13th would negate the constructive outlook for dollar CAD. Kiwi dollar. So the New Zealand dollar has seen a nice bounce out from 2017 lows, but the market is now coming into some critical resistance up towards 71. And while the market holds below 71 on a close basis, there is an expectation that we'll see the market stall out again in favor of a renewed downside and a break back below the 2017 low at 68.18, exposing the next downside extension towards the 65 to 66 area. SPX 500. The S&P 500 has extended its run in 2017 to another fresh record high this week, and the break above 2400 recently does expose the next measure move extension objective up all the way at 2480. At this point, it would take a breakdown all the way back down below 2322, the low that we'd seen on the 27th of March, to suggest that we're seeing the onset of a material reversal and potential top in this market. Until then, any setbacks are classified as minor corrections in favor of what should be additional upside. Gold. So gold has been putting in a series of higher lows and higher highs since basing out in 2016 ahead of 1100. The most recent setbacks have been supported down around the 1215 area, with a higher low now sought out by 1215 in favor of the next upside extension above 1296, which is the 2017 high, which would confirm that 1215 area higher low and open the door for the next measured move upside extension beyond 1296 towards the 2016 peak at 1375 further up. At this point, only back below that recent low that we saw in the 1215 area would compromise the constructive outlook for gold.